Good morning and welcome to another edition of Curious Investors. I hope your weekend has started with a bang and I hope you're enjoying yourself today. I have just a few notes to go over with you all today, and I think these are valuable ones. If you've got a Christmas wish list, this is the episode to watch because it'll give you some ideas where you can invest some money into your future. And so today, for Curious Investors, before we get going, I want to give you the disclaimers so that you don't hurt yourself investing. If you're curious investors, for your safety, there is risk in investing. You will lose money. If you don't lose money, you're not investing. If you wish to remain unidentified from a recording, please remove your name and your face from the screen. We do not have crystal balls. We don't know what the future has in store. We're just teaching you principles to help you along the way. Stock investing includes risk, including fluctuating prices and loss of principal. Dividend payments are not guaranteed and may be reduced or eliminated at any time by the company. The following information is not a recommendation in relation to any specific named securities. Any reference to specific securities here is only for illustrations. Content provided for this event is for general information, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical, and there's just no way to repeat any past performance. So don't think that you can. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee any strategy will be successful. Folks, there are no guarantees in life, so you just need to relax, breathe in, and choose to take the risk that you're going to take. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, a member of FINRA and SIPC. Investment advice offered through Gimbal Financial is as an independent registered investment advisor, and it's separate. We are not the same as LPL. We are separate. We are distinct and not LPL. Thank you. That's the disclaimers for right now. That was not a COVID cough, but that was simply me talking too much too fast and choking myself up. So what are we going to do today? What are we going to talk about? I am switching screens over here. I have been watching past episodes of Curious Investors to kind of organize them in a way that you can tell friends about them and you can see them on YouTube. And that is what I recommend. I recommend the YouTube because on YouTube, you can go down to the bottom right-hand screen, click the settings button. On the settings button, you can accelerate the speed. And for me, listening to myself, I had to accelerate it 2 times normal speed to even stay attentive to what I was saying. So if you're watching these on YouTube, thank you. Tell your friends about it, and we will have more information to help you build a successful investing career. All right, here's what we want to talk about today. What tools for investing are out there? Are there tools that will make you more productive, make you more successful, and reduce your risk in the portfolio? I think the answer is yes, absolutely. There are tools that can do that. The first tool that I would use, and you can even call our office and we may have some of these we can send you. I use this. It's a journal that every day I'll jot down my thoughts about what's going on in the market. I will write down thoughts that I'm learning from other people. I will, I do a lot of learning. I continue to learn. I've been an investor for a long time, but I wrote down this thought the other day. What do bad stock examples have in common? 1, they lack follow through. 2, there's more down days and bad closes. 3, poor volume dynamics. 4, reversals closes below the 20, the 50, or even the 200-day moving average, and that there's no tennis ball action. Those of you that are regulars know what that means. That's just some thoughts that I have written down, so when I'm looking at a particular stock that I've traded, I can remind myself, oh, that's something I know, I just forgot, and I need to incorporate that. So a journal to write down your thoughts, I write down the things I learn, I write down the things that others teach me. I'll write down the trades that I do. I'll write down what I was thinking when I did that trade. I'll write down what I made a mistake doing. I'll write those sorts of things so I can ponder them more as I look to the future, because really I think a key to being successful as an investor is to learn how to not repeat your mistakes. It's true with about any endeavor you have in life. If you are a basketball player, for example, my mentor through most of my adulthood was a fellow by the name of Bob Warren. Bob played pro basketball for about a decade. And he said back in the 70s, the difference between $1 million a year career and his career was that he would release with his elbow at this thing right here. This was the shape where the guys that were making $1 million, they would release the ball with their arms straight up. And he couldn't get over that hurdle. And so that was the difference. But if we can learn from our mistakes and reduce those, it's just naturally going to increase your performance. If you keep doing the same thing, you're going to have the same performance. And so I think it might have been Einstein that said the definition of insanity is doing the same thing and expecting different results. And so as you journal your mistakes, you have to be honest with yourself. Most people try to hide their mistakes. Most people try to hide who they really are from others. The journal is a good way just to be honest about it and get it in place, write it down. The more you're honest with yourself with your trading, the more likely you're going to be honest with others along the way. So who knew that trading stocks would help you be a better person? It will, if you journal your thoughts and your lessons. Second thing that I would suggest to you is some reading. These are some of the folks that I really respect a lot. These are some of the books I took off my bookshelf over there. Probably the first one I'd throw out there to you, this gentleman was, he's very wealthy, he's still alive. I don't know that his health is doing well, but it's called How to Make Money in Stocks by William J. O'Neill. There's several editions of this. It is just a treasure. This fellow not only made a lot of money in stocks, but he developed tools to help others do the same thing. He believed in mentoring and training those behind him, sharing what he's learned with others. So that's what William O'Neill did. Some of his writing he took from these two guys, Jesse Livermore's How to Trade in Stocks. Jesse Livermore was one of the greatest traders back during the 1910s, 20s, and 30s, made ridiculous amounts of money, and was using principles that William J. O'Neill figured out. Same thing with Gerald Loeb, The Battle for Investment Survival. Loeb was a stockbroker back in the day when there were stockbrokers, and he has a ton of wisdom in this book. You probably will have to read it 5 times before you begin to touch the tip of what he's teaching in there. Probably all of these are that way. I've read these a number of times. And then more recently, I've really come to appreciate Mark Minervini. Minervini learned what he does from William J. O'Neill. Isn't that funny? That these people are all interconnected. Minervini does a tremendous job. He has done so well in the marketplace. This one's Think and Trade Like a Champion, and this one is Trade Like a Stock Market Wizard. And Minervini is a kind gentleman. He's willing to share his information via a lot of methods as well. And all these things will cost you an investment. But what you can do with these things is you can accelerate your understanding of how to invest in the marketplace. And the quicker you can do it without losing money, the more money you'll have along the way. Because if you try to figure these things out on your own, you will have to lose money to figure them out. And you're going to lose money, but these things will help you go, oh, I probably shouldn't do that. This guy did it before me, and he's just telling me I'm going to lose money there. And so that's an inexpensive way to save yourself some money. It's going to take you time. I wasn't, as a young person, very gifted at reading, but just look at that, how much reading that is. But I would encourage you to maybe pick up, I would maybe pick up the first book by Minervini and just start reading it, and maybe read a chapter a day. Don't try to read any more than that if you're not a big reader. Read a chapter a day, see what happens. That'd be the second thing I would tell you to do. So first is a journal, second is good books. Third thing that fits into people that don't get very amped up to read, but it's a good learning tool, are podcasts that are out there. I listen to primarily just one podcast on a regular basis. Then there are others that I'll hit up on an irregular basis, and I'll tell you about those here in a second. The one I listen to on a regular basis is called Investing with IBD. It is almost to 100 episodes. So if you go back to episode 1, if you subscribe to their channel and you go back to episode 1, Arisha Paris will talk you through some really cool things. He'll explain some things, and he'll do it with some of the most successful investors of our day. So you can literally learn real time from people who are doing the ideas that we're talking about on Curious Investors. The very best. I'm not the very best. You're going to listen to the very best, and they're going to do a great job for you. I would encourage you to continue listening to Curious Investors, another good podcast. And I'd encourage you to tell your friends about us, because we're going to give some very simple ideas to help people jumpstart their investing ideas in their careers as investors. Number 4, I would subscribe to a couple publications that were initiated by William J. O'Neill. The first, I'm going to share my screen with you real quickly here, is Investors Business Daily is the subscription. It's called, the website is called investors.com. They call it the IBD. When O'Neill started it, it was called the Investors Business Daily. They quit doing it on a daily basis and changed the name to IBD. But if you can see over here, there's a whole list of tools, even within the Investors Business Daily over here. And one of the first ones you'll want to learn is this oval right here that says the big picture. The big picture is going to help with some of the ideas that we talked about in previous Curious Investors, such as the trend of the market. The trend, they'll put, once you subscribe, your screen will look different than this. This is I'm logged in up here, so this is what my screen looks like as a subscriber. Every day that it'll say today's market right here, and it'll have a red, yellow, or green. The red would mean you should not be buying stocks now, and you should probably be completely out of the market. Yellow means you should be moving out of the market and be very cautious, and green means put your foot to the pedal and just mash that thing as hard as you can and invest with good principles. It doesn't guarantee you're going to make money, but these guys have done a nice job over the years. So that is the website, investors.com. You can join that for a relatively inexpensive effort, and you will learn a lot by reading the articles, and they've got a whole bunch of tools on there. There's additional podcasts or webcasts on there that you can watch, and they'll teach you ideas that I don't know that you would ever even learn in the university. All right, the next subscription idea that I would throw out there to you, again, is one that's issued by the folks at William J. O'Neill Company, and it is called MarketSmith. MarketSmith is offers a variety of information very similar to that of Investors Business Daily. It gives it to you in a little bit more succinct picture. This is the home page. It's telling you some stocks that are moving over here, gives you a summary of what the market's doing, whether there's risk in the market, tells you where the money's going. Like yesterday's trading, there was over 640 stocks that were up on big volume, which is a good indicator if you're wanting to own stocks, and yet there were still over 1,000 stocks that were down and then breaking out near pivot. Those are ideas we haven't talked about yet here on Curious Investors, but we can get to on another day. So if I click this button right here, open charts, let me go back and find that screen for you now. And this is what the charts will look like as you're subscribed to this. Procter & Gamble is a company you're probably familiar with, and there's a lot on this screen that you can learn. It's got tools within the tool that can help you improve your investing skills and learn a good amount. So that's MarketSmith. So the first idea is how to journal, record your thoughts. Secondly, are books that can help you out. Thirdly, podcasts, and then specific electronic tools that I would recommend, and those are IBD and MarketSmith. And finally, the fifth thing I would look for is just a coach, somebody that can coach you through, talk you through, look at your trades and tell you things that you might be able to do better. And if you get to that point in this, feel free to reach out to the experts at Gimbal Financial. We are more than happy to give you a few minutes every week to look at what you're doing and offer any critiques that we can help you. There's other coaches that are out there available. They are probably on Twitter. You might be able to find some contacts. If you watch Arusha's Investing with IBD, you will probably find some other names via that. As you subscribe to some of those people's Twitter feeds, you'll get some good input, and they can coach you for free, maybe not specifically to your situation, but you can learn a lot from their efforts on Twitter. So that's what I've got for you today. I trust that you're having a great week and a great month, and I hope you have a Merry Christmas. And again, we'll look forward to seeing you at future Curious Investors, and tell your friends about us. See you soon.